Welcome to the StockOptionAssassin.com's free video for swing trading options. This is Eric. In today's video, I want to go over a potential home run trade, and what I mean by that is it's a longer term trade meant for more of a swing basis, but actually I think this thing can go possibly to the end of the year. It hasn't quite triggered yet, but let me just kind of show you the setup I'm looking at. Now, obviously, we have a big employment number coming out this week on Friday, so this is not a trade to take today, but this is a trade to keep an eye on. It could possibly trigger next week. And we'll be, working with our members on that. But I wanted to kind of give you the setup. And first of all, on my chart, I just have a clean chart. There's no indicators on the chart itself, no moving averages or anything. Just kind of looking at pure price action. You can see on the left here, I have a monthly chart, and on the right, I have a weekly chart. And the stock we're looking at is Baker Hughes, ticker BHI. And basically, what I'm looking at, I have the squeeze indicator at the bottom, and you can see by the red dots here that Baker Hughes has been in a monthly squeeze, and now July has kind of just started. So this candle is obviously not complete. We have several weeks before that, but you can see that the oscillator of the squeeze indicator is moving up, and the dots have turned red. And what that really means is that the volatility has sort of settled down, and the stock is sort of consolidating before its next big move. And you can see this stock, it looks like it's a pretty big mover. You can see previous instances where the squeeze was moving lower, and this the oscillator was moving lower, and we were in the red dots. Eventually, this thing turned green and fired short. This thing had a huge move to the downside, and then look what happened here. The squeeze indicator turned back up. Stock started moving up, started to consolidate again. And then as this thing ended up firing long, meaning that the red dot turns green, this thing had a big move up. So the key is to try to get in before this thing turns light blue. So right now, you can see that BHI has been kind of consolidating here, putting in kind of a nice base. We're moving up. So this is the time we need to start looking at a longer term entry. And because this is a monthly chart, we want to look at options that are farther out. I'm actually looking at some January options. January 2014, and we'll look at those in a minute. So all right, so we have the monthly chart that's looking like this is a potential big mover for multiple months. If we kind of hone in on the weekly chart real quick, similar case, we have a weekly squeeze that's forming. You can see we've been kind of consolidating here. A little bit of a kind of a triangle pattern, if you want to call that, kind of a wedge, where this thing's just kind of been consolidating here. So there's actually a little bit of downside risk. Obviously, if the job numbers or the market reacts negatively to the job numbers, this thing could actually pull back here, but it would not negate this pattern that's setting up with the indicator. So weekly squeeze is forming. This is, I don't want to put too much credence into this week because it's really only a 3-day week. But right now, it's a 4-day week with Friday, but there's no trading tomorrow. Right now, the weekly squeeze is starting to turn positive. So this is actually a good sign that this thing really wants to break out higher. And if we kind of drill down to the daily chart, the weekly squeeze has already fired long. So any sort of pullbacks in BHI, I would want to get long on. I'd probably wait till next week. There's a lot of unrest going on in Egypt and all this stuff. So I think next week is a better time to sort of get into this. But if the market does start to break on Friday to the upside, if you can clear this 40, we'll call it $49, then I think you can make a pretty good move over the next few months into the mid 50s, and if it really gets going, up into the 60s. So this is sort of a long-term play. I think you can play it to the right now you can play it long as well, but I prefer to sort of wait for a pullback. So let's go ahead and look at some options. The options I'm looking at for this long-term play. Now this is a home run type option play. This is not a short-term option. So what I'd be looking at is the January 2014 options. I'm looking at Delta 20. In this case, you can see the Delta 23. This is out of the money options. These are the 55 calls, and these are going for about $1 right now. And so if the market starts to break up, yeah, these will kind of increase in value a little bit. So maybe if the market breaks up next week, you might have to pay $1.20, something like that, a little bit more, $1.50, but that's fine. But look, we're looking at the 55 calls, okay? So if we go back to the chart, and really the 55 calls are right here. If the monthly chart really gets going and these can go in the money, this is going to be a serious home run trade. We're talking about a double or triple. But again, the risk is 100%. You would be risking 100%. If this thing trades sideways and doesn't do anything, these out of the money options will eventually go to zero. We need a big move, over the next couple months for these to go in the money. We would start taking profits. But so this is basically, you're risking 100% to potentially make 200-300%. So that's sort of the risk reward there. There's no stop on this. It's all or nothing, and you're going to let this ride for the next few months. So hopefully that helps. If you're interested in learning more about the squeeze indicator and how that works, if you take our trial, we have a trading course called the Momentum Sniper. Here I'm logged into our premium options video newsletter site called the MTS. You can see, in addition to the typical daily update and daily videos, we also have an educational center here. And if we click on the Momentum Sniper trading course, that's going to bring up a series of videos that's really centered around that squeeze indicator. And you can see the third video here is the squeeze indicator explained. It talks about how the indicator is formed and what we look for. And this course also gets into the multiple time frames and a couple other indicators we use to help with that. So hopefully that helps. If you guys have any questions, let me know. And you guys have a great 4th of July.